Okay, well, we are just a couple of seconds away from the pre-open session. Deepan Mehta, of course, is still with us. Deepan, weigh in on some of these names, if you will. BEL, which sold off quite a bit from 120-ish levels. It's back. It's down under 90. BKG saw a sharp cut yesterday. Some of this, of course, is continued earnings reaction as well. And JSW Steel, we had a sell call from Mitesh earlier, but that was on technicals. So any thoughts? BEL, BKG and JSW Steel.
Prashant, negative on steel on the whole. We've always been negative on commodities for a long period of time. And JSW Steel, I think many challenges going ahead in terms of volume growth as well as pricing. So like to just wait and watch over there. BKG, I think valuations again coming into play over here. And if you notice, I think the street is particularly punishing stocks which are trading at very high P multiples. And even if there's a slight miss on the earnings, then the traders are unforgiving and we are seeing steep declines over there as well. So I think both these stocks, one should perhaps wait and watch and look for other opportunities. The first stock which you said was, I don't recollect.
BKG, JSW Steel and BEL, Bharat Electronics.
Yeah, BEL again, same story, slight miss on the earnings and the stock has been rallying for the last several quarters or so. So you could expect some amount of disappointment over there, which has come into play. But I think long-term story in BEL still remains pretty much intact with the kind of order book visibility which they have.
Okay, I think BEL names like L&T could be the stars of the show in the budget tomorrow, right? Considering that the government's push has been on capex, manufacturing and defense. So on L&T as well, Dipan, I mean, we talk about this every year, but this time there's a 15% growth expected in capex and manufacturing. And of course, L&T's numbers were also pretty decent. Is that a stock that you like?
Yeah, Sonia, absolutely. A disclosure that we and our clients are invested. I think L&T is like a must-own stock in your portfolio, should be top 5 holdings, given the kind of position the company has in the infra space. So there are certain projects which only L&T can execute. And look at the management strategies over the last several years, where they focused on getting higher return on capital and divested of a lot of the businesses which are a drag on the balance sheet and the overall operations. And good amount of value being built in the subsidiaries as well. So we're very, very positive on L&T. And these numbers were exceptionally good and management commentary also was very positive. Stock is slightly trading at a premium, but I think those premium multiples are justified.
Okay, all right. Deepan, request you to hold on. Well, ahead of tomorrow's budget, Finance Minister Nirmala Sitharaman will be tabling the economic survey later today. And sources tell us that the report is likely to peg GDP growth for FY24 at around 6 to around 6.8%. Shireen joins us on the phone line to tell us more on that. Morning, Shireen.
Morning, guys. Well, the budget countdown has quite literally begun in earnest. It is going to be the day that the economic survey will be tabled in Parliament by Finance Minister Nirmala Sitharaman. Around noon is when it traditionally is tabled. Remember, this is also going to be the first economic survey authored by the current chief economic advisor. It was interesting that he had joined last year on the day that the survey was presented. So this is going to be the first full authored survey of chief economic advisor Anantha Nageshwaran. As we were pointing out, in terms of the growth estimates, pretty much in line with what agencies like the IMF, etc., are forecasting for India. The estimate for FY24 is likely to be between 6 to 6.8, with a baseline scenario of 6.5%. Nominal GDP pegged at 11%, and real growth is seen at 6.5%. That is the estimate at this point in time. Survey will also highlight the resilience that India has seen over the last 12 months, especially given the global volatility. It will also flag concerns on the global uncertainty and global volatility as a downside risk as far as growth is concerned. Outside of that, the survey is likely to talk about some of the other factors. What we are given to understand is that the inflation outlook will, of course, be in line with what the RBI is forecasting, but perhaps the survey will say that capital flows are likely to return as monetary tightening abates, and that is what we're seeing. The IMF also suggests that perhaps the worst is past us as far as inflation is concerned. Growth drivers, the survey will, of course, talk about the fundamental positives and perhaps hold out some ideas, which is usually what the surveys do. But what's going to be important is to see what Chief Economic Advisor makes of the macroeconomic stability, and we will, of course, look forward to any new ideas. But, with the caveat that outside of the growth numbers, the survey's ideas may or may not find their way into the union budget. That is typically the case, but it gives us some indication and insight on what we can expect tomorrow. So do stay tuned. Noon onwards here on CNBC TV 18 will, of course, get you the survey fine print.
Okay, we do look forward to that, Shireen, and thanks for that disclaimer, very important there. But for now, the market is settling in pre-opening slightly higher, about 100 points higher. That's what the SGX Nifty was indicating as well. BPCL is your top gainer after the good numbers, and the beat, as Sonal was also telling us a while back, is led by the refining segment. So BPCL is really your top mover in trade right now. L&T reacting to a good set of numbers as well, where they've maintained their revenue guidance for the full year. They said they could even exceed it if the order momentum continues. And a couple of other stocks. M&M, by the way, just keep an eye out on that. The XUV 400 electric vehicle bookings have been pretty strong, and M&M is firing on all cylinders there. SBI is up 1.5% after the 15% fall that SBI has seen this month. Perhaps some buying action there. Manoj Muralidharan, Vice President Derivatives at Relicare Broking, joins us now to talk more about that. Manoj, action-packed day lined up. How are you positioned?
Good morning, Sonia. Sonia, what we need to understand here is if you look into the selling that is from the FI desk, at least in the cash market, a good 8 to 10,000 more selling comes in and the Nifty might breach and get into a new low. Now, for the series, at least on the index side, they are at the highest level in terms of short position. They're as good as 82% short on the Nifty, at least on the index rather. And getting in the budget with that. So I am afraid we are still in a sell-on rise. I would rather use this bounce or gap up opening today, because I believe that 17,800 to 830 on the futures is where the resistance is. We'll use this gap up to short the market and go down, and possibly the intraday support can be as low as 17,600 to 650. So it's a sell-on rise, at least on the Nifty, with 17,800 to 830 as the resistance, and at least the short-term support closer to 17,600 to 550. I believe stock-specific Coal India would be good to buy here. We have seen good long build-up, and I believe this has a follow-up buying which might come in on the stock as well. A target close to 235, so buying it closer to 223 to 25, where we recommend a stop loss of 220 for a target of 235. And NTPC would be one stock. We believe that there is a possibility we might see at least a good 7 to 8 with a short-term surge. So almost 179 as a target. We recommend buying it close to 168 to 169 with a stop loss of 165 stock as well.
All right, Manoj, thanks very much. Good speaking with you. There are some flashes at the bottom of the screen, and this is important. This is a statement coming in from index manager FTSE Russell. So this is similar to MSCI. MSCI, of course, is a much bigger index manager, but FTSE Russell is pretty big itself. And they say they put out a statement. This is dated today, 31st of January. They say that FTSE Russell notes the media reports regarding the Adani Group and its associated securities. And FTSE Russell would like to advise that in Adani Index constituents within the FTSE Russell indices will continue to remain eligible in accordance with the underlying index methodologies, subject to satisfying all index inclusion criteria. We can maybe have these lines up. However, FTSE Russell continues to monitor publicly available information on the company, in particular by the Indian regulatory authorities, for any developments. Prima facie, this is positive, and I'm assuming for those who are worried about how would some of these index managers, global index managers, react. There was, of course, MSCI, which I think was in focus after that report that they'd written to the Adani Group, seeking more information from them about about all that had transpired over the last 3 or 4 days. They were worried whether FTSE Russell also would do the same, and whether there would be any impact. Now, of course, we are hearing from FTSE Russell. As of now, stocks remain eligible to remain within the indices, of course, subject to monitoring of further developments, etc. So that is coming through for the Adani Group stocks right this morning. So that's the big story which we will continue to track. But more earnings, Nigel. Dwarikesh reported numbers.
Dwarikesh Sugar, they posted a rather weak set of numbers. The revenue was down by close to 30% past quarter. The margins of the company as well did contract around 7% from around 9% earlier. Let's invite the management. We have Mr. Vijay Banka, the MD of the company, who joins us on the show. Hi, Mr. Banka. Thanks so much for joining in. Well, let's talk about the ethanol part of the business, because that's one part of the business, Mr. Banka, that the street was quite optimistic on. So what is the sales volumes? What do you expect to end this year with? And also for FY24, where do you see that number headed? I ask you this because you've added capacity out there and the street was quite bullish. Go ahead.
Thank you. Very good morning. We have had sales of about 1.68 crore liters of ethanol in this quarter. And in the next quarter, again, we will be doing sales of about 1.5 crore liters. So together in this fiscal, we will be selling ethanol. We already done 5.5 crore liters, so maybe we'll sell about 7 crore liters of ethanol in this fiscal. Yes, the ethanol is going to be the mainstay of the business. This will help in moderation of our sugar production and inventory. And this actually is going to be a paradigm shift in our business model. Margins from ethanol business are going to improve going forward as the season progresses. The model that we have been following is that we are producing ethanol from sugarcane juice directly. And during the off season, we will be producing ethanol from B-heavy molasses. So what has happened in this quarter is, for the first time, we took a production of ethanol from juice directly. So there were teething problems, but we have overcome them all. And typically, when we start the season, the recoveries are rather low. So it also reflects on the ethanol productivity.
Okay, all right. And what about for next year? 7 crore liters is what you're looking at for FY23. For the coming year, do you gradually go to around that 10 crore? I think that's what you told us in the past, in 2025. You could clarify on that.
Certainly, we'll be able to do more than 10 crore liters in the coming fiscal.
That's in FY24 itself?
Yeah, FY24.
And your total capacity is how much?
Our capacity is 337 kiloliters per day. So we assume we'll be working for more than 300 days. So, well, our ethanol production could be anything between 10 crore liters and 11 crore liters.
Okay, so that is a big move, right? 27% growth is what you're looking at in FY23, from 5.5 crore to 7 crore liters. Then from 7 to 10 crore liters. And as you said, there's a paradigm shift in your business model as well, with a bigger focus on ethanol now. What would this mean for your overall revenue growth? What are you looking at by the end of FY23 and 24?
Well, the fourth quarter is typically a good quarter for all sugar companies because we have production, we have better recoveries in this quarter. Well, to talk of the top line, it's not the top line that we are focusing on. It's the revenue mix that we are focusing on. We are trying to have more of ethanol in our sales mix so that our bottom line gets better.
Okay. All right. Mr. Banka, we have a short chat, but effective one. Thanks a lot for joining in and giving us a quick take. That's Dwarikesh Sugar speaking about a 27% growth in FY23 in the ethanol business. And they're looking to grow from 7 crore litres in FY23 all the way to 10 crore litres going forward. So that's a big move there. But by the way, the Nifty is now settling about 0.5% higher. We have some 9-10 calls coming in as well. Adani Group stocks are seeing a bit of a revival this morning. So Adani Enterprises up about 3%. And then you have, names like BPCL, M&M, SBI that we spoke about earlier. Reliance also front foot forward this morning. Sudarshan, what's the big call at 9-10?
Buy the Nifty on minor dips and buy Coal India with a stop under 220.
Okay, buy Coal India. Got that. What about you, Mitesh? What would your view be?
Yeah. I'll go with a long on Coforge. Keep a stop below 43.90 here and a target of 44.75.80 to begin with.
Let's just have the Adani Group stocks up on the air and see what they're doing in the pre-open session. By the way, there have been changes in circuit limits for these stocks, from 20% I think it's gone to 10% for at least 3 names, cash stocks for the Adani Group companies. So this is the pre-open rates. I mean, of course, slow start. Enterprises is up 3%. Green is starting down about, I think, 4.5%. Adani Ports is absolutely flat. And a few others came up earlier as well. So that's, of course, going to be in focus straight off the bat. But GAIL lost heavily on the back of earnings yesterday. Sonal is back with us to tell us more in terms of what the street made of the numbers. Sonal, over to you.
Thanks a lot for that. Well, different views as far as GAIL's brokerage commentary is concerned. For instance, Citi has actually, after such a weak set of numbers, upgraded the stock to a buy, raised the target price to 110 rupees per share. They say, yes, it was a big miss across segments, but earnings have likely bottomed. They are upgrading on regulatory tailwinds because there is an expectation that there will be clarity on tariff hikes in next 3 to 4 months. But yes, Q3 EBITDA was a big miss according to Citi, and Jefferies has cut their EBITDA estimate by around 24 to 8% for FY24 and FY23, and that is because there was a sequential loss because of loss of volumes for Gazprom, and reallocation of APM gas for transmission is something that impacted their EBITDA as well. So while Citi is positive, Jefferies continues to be negative on GAIL. Okay, thanks a lot for that. We're just heading into the market opening, 20 seconds left. Amara Raja, by the way, there was a fire at one of their plants. There were no casualties, thank God for that, and no injuries as well due to the incident, but a fire has caused damage to their property, their building and their premises. But here's the market opening for you, looking good this morning. The first tick on the index, the Nifty is up 75 points, the Sensex up 200 points, and the market breadth as well in favor of advances. So we've started front foot forward. It's a Nifty bank that is supporting the market today. The PSU Bank Index is the top gainer actually, the Nifty PSU Bank Index up almost 1.5%. So that is the one leading from the front this morning. Adani Group stocks are staging a comeback, but now the market is getting a bit choppy. So just keep an eye out on that. BPCL is your top gainer after a good set of numbers. SBI 1% higher after the steep fall it's seen in the last many days. M&M on good bookings for the XUV 400 EV, that's looking good. DRL is up about 0.6%. Reliance, Bharti Airtel, SBI Life, a couple of other stocks that are trending on the green line. On the downside, Tech Mahindra posted its numbers is down about 1%. HCL Tech is also under a bit of pressure. In fact, all IT stocks are a bit under the weather this morning. Wipro is down about 0.5%. So is TCS in the red a tad bit. Other banks as well. Axis Bank is dragging its feet a bit. Indices, Kotak Mahindra Bank are also a tad bit soft this morning. And L&T is down 1% post its numbers. As our colleague Vivek was also telling us, that there is a bit of a disappointment in the EPC margins. Maybe that has caused some profit taking. In any case, the stock has had a good run as well. So now L&T is down about 1.5%. So it is a slightly positive opening, getting a bit choppy at the moment, so do keep an eye out on that. Of course, holding on to the lows of yesterday, which was 17,400, which is good for the bulls, but not making too much headway on the upside. So definitely some caution on board. A couple of more stocks to watch. Ultratech Cement is in the green right now. And in terms of monthly movers, you've had a big move coming in on Tata Motors this month. It's up 15%, the biggest Nifty gainer this month, and it's adding on some more weight this morning, up about 0.3%. In fact, all auto stocks, Tata Motors, M&M, Bajaj Auto, Maruti Suzuki, come out with their sales tomorrow. And ahead of that, this pocket is looking strong amidst all the chaos. So just keep an eye out on that. But the market is really very turbulent, and just perhaps, wait and watch ahead of the big event.
Well, that's right, Sonia. And the call earlier today was don't chase the opening. I think that's playing out because the Nifty is almost moved into the red. So just keep an eye on that front. Loris Laboratory as well. First look at it, it appeared that the numbers were good. But after that, if you looked at the fine print, well, the numbers are a little bit disappointing. And now they have scaled back on their guidance as well, both on the margins as well as on the profitability front. Remember, that was scaling back from already being scaled back. So that stock has pulled back closer on 2.5%. Coforge is under some pressure. That's down closer around 2%. REC, those numbers look quite disappointing. Abhishek told us that the margins were at multi-quarter lows, so that stock has opened up with a bit of a cut. On the flip side, you have Ambuja Cements. Yesterday as well, the stock had opened up well in the green, but it ended almost in the red. For starters, it's up 4%. ACC as well is higher. Remember, it comes out with a set of numbers later today. And you have Adani Enterprises that's opened up with a gain of around 3.5%. That's going to be the crucial factor in today's trade. SRF, the numbers look quite good yesterday. Sonal told us late in trade. Well, it's building on some of those gains. So that stock is up close to around 3% as we speak. KEC International, they bagged an order more than 1,000 crores out. So I think that stock had opened up well in the green. So keep an eye out on that one. On the flip side, a couple of other names like Imfarm, that stock is a little bit under pressure. I don't know what's gone on in Mangalore Chemicals, but that stock has opened up with a gain of close to around 10%. Mangalore Chemicals and Fertilizers up 10% as we speak. Prashant?
The market's now actually in the red. It flipped into the red for a brief moment. 17,655 or so is where we are at. Look at that. I mean, absolutely flat is what we have on the screen. So let's just look at what else is going on. Mazgaon Dock is up about 4.6, 4.7%. Stocks at 800 or so now. The SRF, I think we highlighted earlier, 3.5% pop, 22.27 or so on SRF. I think BPCL is up about 4%, 348, 349 on BPCL. Data Patterns is up about 3.5%. Reacting to numbers, of course, we had the management with us yesterday. I think the stock ended 10% higher. It's up another 4%. HPCL is another one, MRPL, KEC, these are names which are coming up with gains. Market breadth is positive, 2:1 in favor of advances, but we'll see. Adani Green is down 9%. I mean, as I said, the daily circuit limit has been reduced from 20 to 10%. Adani Transmission is down, Adani Total Gas, beg your pardon, is down 10. Adani Transmission saw a recovery yesterday. It was down quite a bit and then recovered 5-6%. And I think it's recovering more. It's down only 3.5% now. So these are some of the big volume-led movers on the downside that one is picking up. Coforge, 1 3/4 lower. Laurus Laboratories down 3%. LTI Mindtree, Varun Beverages, PTC, Adani Wilmar. Adani Wilmar is down another 5%. So I think that's the daily circuit limit for that one. So that's the open for you. The gap is narrowing already. Some 1,000 stocks are higher and about 700 stocks are lower. And the Nifty is down 23 points. So within the first 5 minutes, you've had a bit of a swing after being up 80-90 points. We're down 20 points, over a 100-point swing in the first 5 minutes. Sonia.
All right. Well, lots happening now in the market. So let's get our market master into the conversation as well. But before that, it's time for the CNBC TV18 budget quiz. Just a day to go. Remember, there are prizes to be won every day. Without wasting any time, here's today's question. What was the fiscal deficit to GDP for FY22 revised to in the last budget? Your options are A, 6.6%, B, 6.7%, C, 6.8%, and D, 6.9%. If you think you know the answer or you want to just take a guess, post your answer in a comment on the question tweet on @CNBC-TV18 News. Use the hashtag budget with CNBC-TV18. Hurry and send us your answers. Remember, we'll announce the winner at 3 p.m. today. In fact, we have Dheeraj Agarwal, co-head equities at Ambit Capital, who's joining us now. Dheeraj, good morning and thanks for joining in. So the expectation this time, and just taking from the CNBC TV18 budget quiz, right? The expectation is that the fiscal deficit could narrow to less than 6% of GDP. And on the back of that, the government could perhaps ensure that public capex spending is sustained. The focus could be on growth this time. Is that your base case assumption as well? And anything else that could drive the markets higher from the budget per se?
I think that expectation is quite reasonable. We are also expecting fiscal deficit to be lower and to be contained. And the central government push on the capex and infrastructure to continue. Whether that's enough to drive the market higher is another question at this point of time. Our preference is, at this point, a huge rally, despite whatever the budget does or tries to do, is going to be a bit difficult. So still looking at a little bit of a range-bound market scenario with a slight upward bias, but not a completely breakaway market.
Okay, so then from a sectoral standpoint, is there anything that you would go with? I mean, into the budget, anything that you like this time around? The focus will be on capex, manufacturing, defense, renewable energy. So a lot of these companies, I mean, of course, a lot of the announcements have happened off budget through the course of the year. But particularly from this event, any stock-specific or sector-specific biases that you'd have?
Not at all. I think barring the one-day volatility or 1.5-day volatility around the budget has stopped actually moving sectors and stock prices in any meaningful fashion quite a few years ago. But for one reason or the other, the market seems to be still obsessed about budget being a turning point. Budget is what it should be. It's an accounting exercise of the government revenues and expenses. And a little bit of shift, a little bit of tilt towards capex, revex, fiscal deficit, etc., which drives a little bit of macro. Most of the policy announcements and the big policy shifts are now outside the budget, which is the way it should be. So no, I have no budget recommendations, positive or negative, at all.
All right. Hi, Dheeraj. Good morning. You've told us your preference in terms of the banking names, SBI as well as ICICI Bank. Both of them, after seeing a good rally, and they were the flag bearers really of that Nifty bank up move. But they've come in for some profit taking. from the banking space, would these two find preference yet again?
Yeah, we like Axis as well, so all three. And so all three should find preference at this point. But we've been saying also for a while that banking should see some margin pressure going forward because credit growth has been running like mid-teens, 15, 16, 17%, but deposit growth only 8 to 10%. And the surplus liquidity which the banking system had been almost completely utilized. So at this point, there is no option but to chase deposits a little bit, which will result in some impact on the margins. I don't think market is fully pricing in that. So while within the space we like these three names as our top three picks, but beware that a bit of margin pressure going forward in the next few quarters, 3 to 4 quarters, is bound to happen.
Dheeraj, do you have a sort of conviction market view in the near term? Which way are we headed? Are we at a bit of a impasse, or you think things will move quickly?
No, I think it's still a range-bound market. So our theoretical EY/BY model has a estimate of 19,600 by end of this year. But at the same time, we also observe there are lots of fault lines appearing in the market this year. And if at all we do reach a fair value, it's going to be a rocky path with lots of choppy up and down movements. Or it's quite possible that we may actually miss it as well, although that's a theoretical fair value basis EY/BY model, because a number of fault lines are appearing. So my preferred market bias at this point of time is we continue to chop in a broadly 10% range, 10-12% range without going anywhere this year as well. So quite similar to what we saw last year. We chopped up and down 2 or 3 times, ending the year with just 4% gain. I'll be surprised. I'll be surprised if I see more than a 4 or 5% net move in the market on either side come December.
In fact, now the market is, taking a cue from what you just said, right? And it's getting into extremely choppy terrain. The Nifty is now down almost about 30 odd points. The Sensex has lost its mojo, early morning mojo, and is down about 120 points. Pressure coming into some of the vulnerable names in the broader markets. Yes Bank, Zomato, all under pressure right now. Nykaa is down 1.5%. And from the Adani group, it's disparate moves. So Adani Green is now down almost about 8 odd %. Dheeraj, just one follow-up to the whole view on banking. I understand, you were saying, you were talking about the impact that chasing deposits would have on margins, etc. But what was the sum and substance of what you said? Would you look to buy any of the large cap banks now? Because it's a steep fall, right? SBI, for example, is down 15% in Jan already. Good time to buy?
Yeah, I think so. I think, the banking stocks might have fallen for a different reason at this point, but at least after this fall, hopefully this little bit of NIM pressure with that we'll see may not really impact the stock prices too much on the downside. So they are certainly buy the dips, but the kind of returns that we saw in banking space last year, don't expect that to be repeated this year. So, one of the key takeaways, or one of the key deciding factors of a choppy market is that the price of entry or price of purchase becomes very, very crucial, which was not the case, let's say, a few years ago when sectors and stocks which were doing well kept on doing well, and irrespective of price of entry, you still made money. And now one has to be a little sensitive about price of entry. So yes, you're right. These dips might be buying opportunity in banking names.
Okay, all right. Dheeraj, the sector that's done very, very well in this year so far is the IT index. And I recall you being quite constructive on select IT names. Do you maintain that view? And if you could give us, in terms of preference, if you could name a few stocks.
Yeah, we maintain that view. In fact, we are carrying a strategy called that IT should outperform the market and even perhaps banking for a while. And the reason for that is, what I prefer to say, is more by elimination rather than selection. So expecting to see, as I said, we're expecting to see margin pressure in banking. We are seeing some amount of demand slowdown in consumers. Pharma is still sort of struggling. So IT becomes the place by elimination to park some money, and IT had underperformed quite sharply last year. falling 30-35%. Last 2 quarters, we haven't seen any earnings cuts in IT, although we do expect fundamentally that next year growth will be soft. But relatively speaking, it's standing out a little bit. So we like within the space, HCL Tech is a top buy. Tactically, we like TechM. Mid caps, we like Emphasis. Amongst large caps, while we're carrying sell recommendations on both TCS and Infosys, at the current valuation, we prefer Infosys over TCS. So that's the broad sum and summary of our IT view.
Okay, thanks a lot, Dheeraj, for joining in. Have a great day. Thanks for being with us on the channel. That's Ambit Capital with their view. By the way, don't lose focus of what's happening in the market. There is definitely selling pressure. A budget or no budget, this market is weak, and you're seeing it on the screen. The Sensex and the Nifty are now down, not by a large amount, but down to the lowest point right now. And all the Adani Group stocks are falling very hard. Adani Total Gas is down 10%, Adani Green is down 10%, Adani Wilmar. So that overhang continued despite all the back and forth that we've seen from the group as well as from Hindenburg. There's no respite on the stocks. So a couple of them, of course, have seen a bit of a pullback, but not convincing. And Adani Transmission, for example, is now down almost about 3-4%. A couple of these, names in the home improvement theme are starting to come off quite a bit. So just keep an eye out on that. Something like Kajaria Ceramics is down about 3%. But L&T is still the stock on our radar ahead of the budget. Of course, there's a big capex spend that the street is expecting, and the numbers as well. Vivek is joining in to tell us the latest on that. Vivek, over to you.
Well, absolutely right. We mentioned about, the key takeaways as far as L&T was concerned in terms of the results, in terms of the numbers. But what we're tracking right now is the kind of guidance that the management has provided in the conference call. So in the conference call, order inflow as well as, the kind of order pipeline that the management said, they were extremely positive on it. They said most likely going to reach the upper end of, the guided band of 12 to 15%. In fact, analysts believe that the company should be able to exceed it. But what has come in as a disappointment, which explains the kind of stock price movement that we're seeing today, is the fact that the company, which started FY23 saying that they expect core E&C margins to be around the 9.5%. They've trimmed it down lower to now 8.9%. So this is something that the market at this point of time is, not liking. The other important thing is that, the kind of job mix that the company had, due to the fact that some of these contracts that they're right now executing are backdated, and these were tied up at the point when inflation was high and some of the steel prices were very high. This also, at least for the next couple of quarters, could impact margins. On the back of that, the margin guidance reduction is something that the market is not liking currently.
Okay, thanks for that. Well, all the auto stocks are up and about. Remember, auto sales come out tomorrow, and it's expected to be a strong showing this time, especially for M&M, Maruti, TVS Motor and Ashok Leyland. Ashok Leyland also comes out with earnings tomorrow. So ahead of that, these auto names are doing quite well. The other pocket we're looking at is the financial space. Fusion Microfinance on our radar. CLSA has written a note there. Abhishek is here to give us the fine print. Abhishek, over to you.
Well, Sonia, CLSA has initiated coverage on Fusion Microfinance with a buy recommendation and a target price of 550 per share. So they say that Fusion MFI is amongst the youngest large MFI in India, and its balance sheet size is about $1 billion. So over the next 2 years, Fusion is poised to benefit not only from the microfinance story that is panning out, but also from the deregulation of the yields that these lenders charge to their customers. So the spreads will improve from here onwards is what they are suggesting. They expect Fusion Microfinance to deliver a 25% AUM CAGR over FY22 to 25, and they believe that ROA could touch about 4.7%, while ROE about 20% over the next 2 years. And they also say that Fusion Microfinance is well capitalized to augur for the medium-term growth that the management has in sight. Back to you.
Right, Abhishek, thanks very much for that. The Fusion Micro. IT, by the way, is the one index which is selling off the hardest. The IT index is down 1.5%. NASDAQ pulled back 2%. Maybe it's a little bit of rub-off of that. But there isn't anything new in terms of news flow or a big bad earnings, which is seeing a rub-off elsewhere. So this is, the index is coming off hard. Now, Tech Mahindra is in focus. Rima is here with, of course, a quick view on the earnings and what the street made of the numbers. Rima, over to you.
Thanks so much for that. So Tech Mahindra is disappointed on the top line. Their constant currency revenue growth was just 0.2%. lower than estimates of 0.5% and also lower than what peers had reported. The company was impacted by furloughs. The furlough impact was close to about 1%. Even their top 5 clients, the top 5 clients declined by 15% on a year-on-year basis. Quarter on quarter, they declined by 4%. And the company did indicate that there are some headwinds in a couple of these top clients. That's the issue. So furloughs is one. There was general spending weakness on the back of macro uncertainty. Sectors like BFSI declined. BFSI revenues declined by 0.5%. Manufacturing was, absolutely flat in the quarter. No growth over there. And the company indicated that even in Q4, there will be some impact of furloughs. In fact, CLSA is estimating that the revenue growth will be flat on a quarter-on-quarter basis next quarter. So on the top line, there are some concerns, and even the management commentary in the conference call was fairly muted, which is what has disappointed the street. On the flip side, the margin performance was better than street expectations. EBIT margins at 12%, but again, it's lower than what peers have reported, and deal wins are fairly healthy at $795 million. But it's the miss on the top line and the muted performance, the cautious commentary, which has disappointed the street today. Back to you.
All right, Rima, thanks very much for that. By the way, the market's taken another leg down. It's down 75 points. So at the day's low so far, 17,573 is where the index finds itself at. Now, Punjab National Bank posted mixed third quarter earnings, while loan growth is robust at an 11-quarter high and has aided the net interest margins this quarter as well. The return ratios remain weak for the bank. We'll talk about the third quarter numbers and with Mr. Atul Kumar Goel, Managing Director and Chief Executive Officer at PNB. Mr. Goel, thanks very much for joining us. Great to have you with us here on CNBC TV 18. As I said, we'll talk about the third quarter numbers, but I think as you would understand, the big focus for markets is, and the reason why some of these bank shares have fallen quite sharply over the last 3-4 days is with regards to the Adani story, right? The report which was released and the consequent price damage and share prices we've seen. Just wanted to understand from you, Mr. Goel, what is PNB's aggregate exposure, in terms of loans drawn, non-fund, investments, total aggregate exposure of PNB?
Thank you very much. As far as exposure of the PNB is concerned to the Adani, it is around 7,000 crore. Out of 7,000 crore rupees, the investment exposure is only 40 crore. And funded exposure is around 6,300 crore, out of which outstanding is only 3,000 crore, and remaining is the 700 crore, which is a non-fund exposure. And we have taken the exposure in 9 to 10 companies. All exposure of the PNB is the cash generating assets. As on date, all the payments are up to date.
Okay, so all the payments, you're saying 7,000 crores of the exposure that you have. Any problems that you're having with repayments at all?
Not at all. As on date, all the accounts are in the standard category, and whatever the exposure we have taken in the Adani, all the assets are cash generating assets.
Okay, so can you give us some guidance? In fact, in your own balance sheet as well, the stress has come down quite a bit. What is your guidance as far as slippages and the asset quality goes for the entire book in FY24?
If you see, madam, the quarter by quarter, this slippage is coming down. First quarter of the current financial, it was 6,500, then reduced to 6,000 crore. Then again, this quarter, last quarter, it was around 4,000 crore. So if you see the total slippage is reducing quarter by quarter, it will be around 2% for the next financial year.
Okay, all right. Hi, Mr. Goel, if you could give us a few more details then. Your asset quality, gross NPAs as well, they have come down to around 9.8%, and that's the lowest we've seen, I think, in around 28 quarters odd. Even the net NPA as well, the ratios have come down to the lowest in 20 to around 30 quarters. What's the guidance on both these two numbers, if you could give us a sense out there? And the other big question mark is on NIMs. NIMs are looking solid, but the cost on the liability side has gone up. So what is the number we should look at? Go ahead.
Yeah. Thank you very much. First, I will give the guidance for the gross NPA number. Last time we have given the guidance for the gross NPA, it will be around 9.5% by the March 2023. Since we have already reached 9.76, so we are revising our guidelines. Now our gross NPA number will be around 9% by the March 2023. Similarly, the net NPA number, which we have given the guidance last time, 3.5 by the March 2023, we have already reached 3.3, so it will be around 3% by March 23. As far as NIM is concerned of the bank, it was around 3% in December 21, which has increased to 3.30% in December quarter. So our guidance for the NIM is around 3% for the whole of the year. As far as deposit is concerned, the deposit cost has increased from 4 to 4.15% because the impact of the deposit repricing will come in the times to come, because it depends on when the term deposit is going to be repriced. So this is the reason we are giving the guidance for the NIM around 3% in spite of we have achieved 3.3 in the last quarter.
Okay, so you're saying that on asset quality, things will improve further. You're sitting on 9.7% gross NPAs now as of Q3, and that will come down further to 9% gross NPAs by 2023. That's very good to hear. I wanted some thoughts on loan growth. It's already a 10-11 quarter high in terms of loan growth. Can you tell us what is the forecast for FY24, and where are you seeing the maximum traction in terms of, corporate, rural, MSMEs? Where's the traction coming in from?
As far as credit growth is concerned, in the last quarter it was 13.43%, and last time we have given the guidance it will be remain around 12%. So we are also revising our guidance for the financial year 22-23. It will be around 13 to 14%, and the next year it will be around 14 to 15%. Your another question, where the credit growth is coming, it is from all the sector. Our focus area is the RAM. As on date, the RAM of the bank is around 44%. We want to increase it 55%, and there is a good demand from the corporate side also, because the corporate who have got the sanction limit of the working capital, they were not utilizing in the past. Now they have started utilizing. There is a good demand from the road infrastructure also. A lot of project is coming, and good demand from the NBFC. And the one more thing, because now the expansion of some of the steel company and the cement company, so there is also a good demand in that.
So mid-teens loan growth is what we're looking forward to for this year as well as next year. And, your gross NPAs you've given us as well as NIMs. What about credit cost? If you could tell us, what is it likely to look like? I missed that number. And the other question, sir, is what do you plan to do with your stake in your housing arm?
As far as credit cost is concerned, for whole of the year we are giving the guidance. It will be around 2% for the 22-23, and it will be further go down by 1.5% in the 23-24, because slippage is come down every quarter, and aging provision requirement will come down also, because as on date PCR is around 85%. Your another question regarding the PNB Housing Finance, as on date our holding in the PNB Housing Finance is 32%. And we have to down by below 30%. We have got the permission from the regulator to invest 500 crore in the right issue of the company, which they have filed with the SEBI for 2,000 crore rupees. So we will invest 500 crore rupees. By investing 500 crore rupees, our holding will below the 30%, but it will be above 26%. So we'll remain in the promoter category.
Got that. Mr. Goyal, just one question on, so many believe that while things are looking very bright for PSU banks, there are some who believe that down the road, the lending that you're doing now, I mean, the recent lending that you've done, say, for example, after 2020, while most PSU banks are reporting lesser and lesser stress formation as they work through the earlier legacy book, some of the incremental lending over the last couple of years and now will show up in terms of stress later. Could you give us any sense in terms of how you are thinking about this question, rather? It's a question at this stage.
This is a very good question. I can give you the number of the PNB. Every quarter we are getting the information, how the behaving the new book. I will give you the data from the 1st of the July 2020 to 31st December 2023. We have disbursed around 4,69,505 crore rupees in the last 2.5 years, against which the 898 is only the slippage, which is coming around 0.19%. I can give the further breakup. Out of the 4,69,505, retail agriculture was 65,892, where slippage is 0.16%. MSME 39,061, where slippage is only 1.46%. Retail 75,462, where slippage is 0.27%. Others, which is basically the corporate, 2,89,090, where the slippage is 0.01%.
Got it. Those are a barrage of numbers, Mr. Goyal. But the headline is you're saying you dispersed 4.6 lakh odd crores in the last 2.5 years, right? From the middle of 2020 till date, and you said the slippage is only 0.19%.
Yeah,
that's what you said, right? So that's the okay. So it's so this is, you can describe this as new lending where slippage has been very much under control. Let's hope it stays that way. Mr. Goyal, it's a pleasure. Thank you very much for joining us. Good luck to you and to your team. Sonia.
I think what really stood out for me is the exposure that they have to the Adani Group is about 7,000 crores, and all the repayments are on track, well on track. They are cash generating assets, and 6,300 crores is the funded exposure that they have to the Adani Group, but no problems that they're facing over there at all. For the market, by the way, the sell-off continues, so don't lose sight of that. The Nifty is now down almost 70 odd points. The Sensex is going into the budget quite weak, 220 points lower. Remember, there was large FI selling as well that we had, the largest that we've seen in the last 7 months. So definitely some cautious views over there. Let's step into a quick break. On the other side of the break, we spoke about how the home improvement theme is seeing a bit